Global Monetary Watch delivers research-based insights on currency stability and macroeconomic trends without speculation.
This banking sector is quietly undergoing significant reforms that could reshape the country's financial landscape for years to come. While headlines often focus on speculation or currency rumors, the story lies in policy updates, central bank initiatives, and systemic improvements designed to enhance stability and transparency. In this video, break down the latest developments in Iraq's banking reforms, what they mean for the economy, and how global markets may interpret these changes. The banking system has faced numerous challenges over the past decades, including liquidity management issues, limited digital infrastructure, and regulatory inconsistencies. Policymakers have recognized that modernizing banking is essential not only for domestic financial health, but also to attract foreign investment and integrate Iraq more fully into global markets. These reforms aim to address both operational inefficiencies and structural vulnerabilities. The Central Bank of Iraq has been central to these reform efforts. Recent initiatives include strengthening regulatory oversight, enforcing anti-money laundering standards, and expanding digital payment frameworks. These measures are designed to boost confidence in the financial system, ensure compliance with international standards, and gradually reduce reliance on cash transactions. Major focus is digital banking expansion. The central bank has been encouraging commercial banks to adopt digital platforms, mobile banking, and electronic payment solutions. While adoption is gradual, these initiatives could improve transparency, reduce informal financial activity, and make banking services more accessible to ordinary Iraqis, ultimately supporting financial inclusion. Regulatory reform is another critical aspect. New guidelines require banks to maintain stronger capital adequacy ratios, enhance internal auditing, and improve reporting to the central bank. Reinforcing these standards, the government aims to create a more resilient banking sector capable of weathering domestic and global economic fluctuations. These reforms also have implications for foreign investors. Transparent banking practices, compliance with international regulations, improved reporting standards make Iraq a more predictable and trustworthy environment for international financial engagement. Investors often monitor these indicators before committing capital to emerging markets. Although these reforms do not guarantee immediate changes in the Iraqi dinar, influence long-term currency stability. A reliable banking system reduces systemic risk, improves liquidity management, and signals commitment to fiscal responsibility, all factors that help maintain confidence in the currency. Coordination between the central bank and the Ministry of Finance is essential for effective implementation. Policies related to budgeting, revenue allocation, and monetary supply are increasingly aligned to ensure reforms have measurable impact without creating unintended financial stress. Technology adoption is key. Banks are introducing secure digital wallets, real-time transaction tracking, and online loan management. These tools enhance operational efficiency and allow regulators to monitor transactions more effectively, helping prevent illicit activity while modernizing the system. Risk management improvements are also being prioritized. Banks are required to establish better internal risk assessment protocols, ensuring they can respond to market volatility, unexpected liquidity demands, economic shocks without compromising stability. When compared to other emerging markets, Iraq's reforms are gradual but deliberate. Countries that successfully implemented banking modernization often saw increased foreign investment, greater fiscal discipline, and improved economic credibility. Appears to be moving in this direction cautiously but steadily. Challenges remain. Infrastructure gaps, legacy systems, and limited skilled workforce can slow reform implementation. Moreover, the transition to digital banking requires public education and trust building, as many Iraqis still rely heavily on cash. Both public and private sectors are involved. The central bank sets standards and regulations, while commercial banks execute operational changes. Collaboration ensures reforms are not just theoretical, but practically implemented across the financial ecosystem. For Iraqi businesses, modernized banking can simplify payroll management, access to credit, quarter transactions. Reliable banking services also reduce informal financial practices, which improves tax collection and government revenue over time. Reforms are likely to attract attention from global institutions like the IMF and World Bank. Clear, transparent, accountable banking operations are key criteria these organizations monitor when providing guidance or financial support, and domestic investors often evaluate banking stability before committing resources. Consistent reform signals build confidence, even if currency appreciation or other immediate financial gains are not guaranteed. Understanding the policy trajectory is more important than expecting instant outcomes. In the long term, Iraq's banking reforms can support broader economic stability, encourage investment, and enhance public trust in financial institutions. Immediate effects on the Iraqi dinar or market behavior may be subtle. Structural improvements lay the foundation for sustainable growth. Transparency is a key goal. The central bank has been publishing reports, holding press briefings, and sharing regulatory updates with banks and the public. This open approach helps build credibility domestically and internationally. The key takeaway is that Iraq's banking reforms are methodical, policy-driven, and designed for long-term stability rather than short-term speculation. Observers should focus on institutional progress, adoption, and regulatory improvements to understand the country's financial trajectory. Disclaimer: this video is for informational and analytical purposes only and does not constitute financial or investment advice. Currency and banking markets involve risk, depend on multiple domestic and international factors. Viewers should conduct independent research and interpret policy developments critically. Subscribe for professional, balanced analysis of Iraq's banking and currency reforms.